Have you ever wondered why so many traders focus on gap ups and gap downs in their trades? I want to explain that really quickly in this video. No BS, we're just going to jump into it. For those of you that are new here though, my name is Forrest. I invest this up and I think that you should too. That is my goal, that is my dream. So on my screen right now, I have a chart of SPX, which is just like SPY, right? It's an index, some of the largest companies in America, more or less. I'm looking at the 5-minute chart and you can see that I have a time range going back from Thursday, September 29th up to the current trading session, which is actually still active right now. It's about 12:20 as of me filming this. You can see that we're coming down to almost this low down here at the 35.84 level. I want to talk about these gaps because what we can see here is something pretty obvious as far as this current trend goes, right? So in the close of the session on Monday, October 3rd, there was an overnight gap up. We opened extremely far up, right? So this wasn't just a small gap, right? This was a very big gap up. You can see that on that day, we pushed even higher. Let me go ahead and add volume in here, which I'm not sure why we don't have volume on our chart. So there's volume. So there was a really big gap up, pushed up and up and up, consolidated, right? So most of the move on this day was actually here in the morning. Consolidated, we have a dip, came down, we gapped down overnight, immediately sold off, consolidated a bit. They bought it back up, open of the session, we came back down, right? But more or less, once we got to this area, and let's go ahead and draw some lines here to identify the zone. We basically stayed in this range after this gap up here. We'll actually put a level there as well. On the end of this session, which I will mark with the vertical line here, we were at 37.40. We gapped down on Friday, right? An extreme gap down, almost back to this level where we had actually gapped up. Pretty interesting, right? It's almost like it was magnetized down to this zone. You can see that we chopped in here where there was this end of day chop before, and then we immediately sold off. So think of gaps, guys, as market makers or the hedgies, or it doesn't really matter how you think of them, honestly. And I used to spend a lot of time when I was beginner trading trying to think about who was actually manipulating the market. It does not matter who you think it is. Just understand that there are big players who have a lot of capital that they need to move, and that market makers exist, right? Market makers are definitely a real thing, right? Their job is to provide liquidity, right? When we're getting in and out of trades, often we are transacting with a market maker. So they definitely exist. And then there are also large institutions that need to either acquire inventory or offload inventory into the markets. These gap ups are a good signal into which way the market might move. Now, something to keep in mind is that these are some really big gaps in this case. Even in this small gap where we had this sell-off here, we still want to be identifying what is in this zone, right? So in this range right here, we're now looking at Wednesday, October 5th, where my cursor is. Were there any other supply or demand zones here? There's nothing in the recent few trading sessions to really identify as such. Actually, what we actually have here, if we go back to the previous few weeks, is this resistance level. There's a few actually resistance levels here. We see there was a gap down and there's a resistance level here, which kind of makes sense, right? It came down here and it bounced up off of this resistance level. Go figure. You notice when I drew these lines, I wasn't even looking at these zones back here, and it just so happens that the price bounced off of this zone right up here, guys. Really, really simple stuff. Super straightforward, exceptionally powerful if you want to be a trader to actually look and spend some time charting. You notice I'm not talking about flags, I'm not talking about pennants, I'm not talking about any of that stuff. All I'm talking about is gaps and support and resistances right now, guys. The market makers, the large institutions, the gap ups are basically them tipping their hand as to how they want to move the market. This overnight move in the market, or these gaps, are a way for them to basically, in the overnight session, you know, we can move from down here 36.74 all the way up to, in the next day, 37.85, right? That's almost 100 points. Wait, 36.85, that actually is 100 points in under 12 hours. Really hard to get that big of a move without these gap ups and these overnight sessions, guys, right? So that's what it allows them to do. Great swing trading opportunities. And ultimately, you should be thinking about, if we're here, all right, if we ignore this time frame, let's actually clear up all this stuff. If we're here on Monday, October 3rd, we had this egregious buy up, right? And then we had this sell off. you have to be thinking, you know, what is the most likely next move in this level here, right? We had a breach of this high, this local high here, this session. What is the market most likely to do? There was this buy up, buy up, buy up, buy up, and then they started taking profits right at the end of the session, which is a little weird if you look at, you know, the local pattern here. So I think I did actually play calls here. I played a strangle, some move like that, but I do remember capturing some of this. Wasn't a crazy win, but it was a win, right? Made money. So always be looking for these opportunities. It's a great way to make money, especially if you have a small account, guys. I know a lot of you are small account traders, and I'm actually focusing more of my content now on newer traders and smaller account traders because I know a lot of stuff that I talk about very often advanced, or assuming that people have larger accounts, but not everybody does. You know, we'll all eventually get there. So I'll continue to do both as I'll talk about some more advanced level stuff.
Please, no! No!
But just wanted to do a video just calling out the importance of gaps, especially if you're trading indexes like I am, right? These aren't as prevalent. Well, that's not true at all. It does happen in individual stocks, but I think the importance for these and actually identifying trends, right? So regardless of whether they happen in individual stocks, but the importance of overnight gaps and identifying trends, specifically in indexes, is pretty strong. Right? It's something you really need to pay attention to. I don't think it's as easy with individual stocks. You need to do a lot more, you know, volume analysis and things like that, which still comes into play here. I don't want this video to be 30 minutes long though. In any case, that was it for this video. Quick and simple, nice and dirty. If you haven't hit that subscribe button, go ahead and do that right now. Again, my name is Forrest. I invest in stuff and you should too. See you in the next one. Peace.